Hi, welcome back to the channel. Here's a few things that you can expect from today's stock market analysis video. One, we'll be getting into all of the major US indexes and keep you on the correct side of the market. I'll be getting into all of the key charts and all of the key price levels for the US stock market. We'll be getting into volatility and how you can approach it at the moment. And 4, I'll give you a bunch of really great looking trade ideas for your watch lists for the month of April. If you picked up my last video analysis a month ago, there were some really incredible performance numbers in there, despite, I think, the tsunami of negativity that we've had to deal with across the market. So I'm going to give you the Tier 1 professional analyst view of the US stock market. I will be walking through many incredibly helpful charts and critical data points to help you navigate the stock market over the coming weeks. You'll get a ton of value from today's video that you won't find anywhere else, and as always, hopefully the Scottish accent isn't too difficult for you. If you've followed the channel a while, you know the drill by now. Just smash a like button. If you're new to the channel, just give it 10 minutes and also consider following on social media. There should now also be a quick easy subscribe hologram button in the lower right of your screen. And for disclosure, myself or my clients may hold positions in some of the names mentioned. And please also pause the video for a really important disclaimer before we kick on. Let's start off with a really quick couple of data points. I think we all understand what's going on with the market. This is the equal weighted performance data for all the S&P sectors. And as we can see, energy has completely blown away every other area of the market. Now, again, I'm sure we all see this ourselves. The market, in my view, has already corrected. We can see it with commodities as well, which has been another massive area of the market over the course of the last couple of months. A lot of the commodity ETFs, for example, have absolutely ripped to the upside, obviously the oil markets, etc. But going into April, I think most folks are looking for some kind of tactical rebound opportunity, some kind of tradable market low, market bottom. Now, if you picked up the analysis last month, or indeed over the last 12 months, you'll know that this has been my long-term S&P 500 chart. Now, I always have a lot of caution, especially from a professional perspective, working with hedge fund managers, money managers, financial advisors, etc. One of the biggest, I guess, risk on, risk off tools that you can have is the longer term time frame, and just adding a very, very simple 10-month moving average to the S&P 500 chart. Very, very straightforward. Remain bullish on the market above it. Below it, there are a couple of question marks. Now, what I would say at the moment, the S&P 500 is at a level where you have to look at opportunity, that there's a value proposition by looking to the long side. However, that said, when we get these corrective phases in the market, the big question mark that we have is how big is the correction going to be? We do have deep value levels at the 50-month moving average, which has been very, very timely for timing market bottoms over many, many years now. Now, I don't necessarily expect us to get that far. I'm actually expecting some kind of rebound trade over the course of April, and I am looking at very, very tactical levels. I'm looking at the 2025 tariff crash highs. This is another kind of medium-term S&P 500 chart. I've just added a 40-week moving average. The reason I've added the 40-week moving average is it's very, very clear from the chart that it has historical merit. And that's essentially what we're looking for when we use technical tools like this. Not every chart will be supportive of a 40-week moving average. Some of you might use a 200-day moving average, which is very, very similar. But I am looking at tactical rebound levels for tradable market lows. Something that I did notice earlier on today when I was kind of going through my charts, preparing this kind of analysis for you, is that despite the pullback that we've had across the broader market over the course of the last 6 weeks, over the course of the last 4 weeks, there's been a bit of a stealth movement in new highs. Now, the market has just closed significantly down. This breadth data will update over the weekend. I am probably expecting it to maybe tail off a little bit, but there are a lot of new highs being made in the market despite the carnage that I think a lot of investors are feeling from the technology sector in particular, especially those of you that are maybe fixated on the growth tech names in the market. There are a lot of elephants just walking past in full view. I've got a lot of really great ideas prepared for you today just to kind of show you that it's not all about technology. There are some incredible areas of the market at the moment. But the S&P 500 is now down 9.5% from its recent highs. And again, from my perspective, as someone who specialises predominantly in a kind of buy low, sell high technical view of the market, very, very proficient in identifying tradable market bottoms as well. I'm simply looking for a tradable market low at the moment. One of the charts that I did present to our clients over the last couple of weeks, and again, I'm not expecting this, I am expecting some kind of resolution over the next couple of weeks in the Middle East, but there is a bit of a precedent set for 1970s energy crisis, where the market obviously tailed off a lot. It is something to be aware of. It's not a prediction, just to be super, super clear. I'm not looking to scare anyone today, but it is something that I think you, as an investor, have to be very, very mindful of. But the most important chart for me at the moment is front and center. I think it's the most important chart in finance at the moment is the US dollar index. For those of you that follow me closely on social media, you'll see that earlier on today I did post a chart for the dollar and what are the potential implications if we do see some kind of rally to the upside. Well, for those of you that are maybe not aware of the potential implications, there is a very strong recent inverse correlation between the S&P 500 and the US dollar index. This is the best chart that I could present that visualizes it, I guess, for those of you that are maybe not into charts and data as much as us professionals are. But the US dollar index is obviously basing. If it breaks out to the upside, as we can see, the chart would suggest it's not a great look for the S&P 500 in the near term. So going into April, I'm very, very mindful of the US dollar index. It doesn't mean that all stocks go down. Let me just be very clear on that. It just means that I think you probably need to be a little bit more selective in your positioning. Again, building in potential support levels for the market at the moment. The triple Qs, again, I'm looking at these December highs from 2024 as a potential rebound level. Now, what does a rebound look like? We don't really know until we get there, whether or not it's a 2, 3, 4% move or whether it's a definitive bottom. We'll just need to wait and see. But I am expecting some kind of rebound at these levels. Again, all bets are off if we start to just crater below these levels. I think we're probably looking at markets in turmoil, headlines. The Russell 3000, again, very, very similar look to the triple Qs and the S&P 500. If you picked up the analysis last month, I was banging the drum on the Dow, just saying that this is the one chart that might get a bit of a corrective phase party started. Unfortunately, that looks like it's played out at the index level. Like I said, it doesn't mean just because the indexes are going down that we don't have plenty of stocks going up. It's been a great month for many areas of the market. But by and large, at the index level, it has been very, very challenging. The Russell 2000, Again, after a 60% rally off the market lows, you can probably expect a little bit of digestion up here. But the big problem for me is if all the major indexes put in big failed breakouts at the same time, again, it's generally not great in the near term. I suspect the market will bottom on some kind of news event. Now, whether that news event is something that, along the lines of peace in the Middle East or ceasefire or deal with Iran, I suspect that is what will dictate what the market bottom looks like. But we'll just need to wait and see what that does indeed, the cards that deals us. But the micro caps, again, very, very similar look to the small caps, as you would probably expect. Volatility at the moment. Now, I've had a lot of questions on this chart over the years, especially, I think, those of you that have followed me, over the course of the last 4, 5, 6 years. The VIX chart is very, very timely for timing market bottoms. And again, over the last couple of weeks, for disclosure, my work with my clients has been very much risk off. I've not really been putting too many bullish ideas, new ideas to them, I should say. Plenty of bullish ideas, just not new ones. But I am looking at the volatility index, and if the market does decide to sell off, this is a very, very helpful chart. I don't think you need to overcomplicate the VIX. I know there's a lot of VIX gurus out there and all their fancy ratio VIX charts, etc. This chart has been an absolute gold mine every single time we get that VIX spike above 50. If there is some kind of capitulation event, again, if we do get those spikes, then I'm very, very happy with that, because it's generally very, very timely market bottom signal. So for those of you that are, take one thing from this analysis today is maybe just replicate this chart, maybe within your own software, etc. It is absolutely key to a lot of my market bottom calls. But for those of you that are perhaps fixated on growth technology names especially, I think you need to be very, very careful about what rates are doing at the moment. I won't overcomplicate it too much. I mean, I could just remove these Fibonacci levels, but for me they make sense just to keep them in just from a professional standpoint. But hopefully what you can see is there's a very close correlation with XLE and energy. Obviously with XLE ripping higher, obviously there's inflation, etc. And the big question is, well, what are rates going to do? Well, I think given the correlation, if XLE is going to continue to make new highs, I think it's very, very reasonable to expect for rates to move higher as well. I think for rates to not move higher, you're probably going to have to see some kind of resolution to this conflict in the Middle East and for energy to roll over a little bit. But I think if rates break out and we're above kind of 5%, then I think there's a big problem, especially for a lot of the growthier tech names in the market. Now, if you are a growth tech investor, I get it. Please don't shoot the messenger, but this is how we look at things from a professional standpoint. We're looking for risk to reward propositions. We're looking for the areas of the market to steer our clients in that direction. So, perhaps maybe broadening horizons a little bit if you are fixated on growth tech. Now, again, it's not been a great month for, I guess, precious metals, especially if you're looking at things like gold, silver, platinum, palladium, etc. They've all had monster rallies. They've all met logical upside targets. Again, I've been banging the drum on gold for a couple of years now. It's been stalling under very, very key levels. The message that I've had with our clients over the last few weeks is use the 5,000 level as a potential risk management level. It is a little bit frothy up here. Unfortunately, it has had a bit of a sell-off. If you are looking to buy the dip in gold because of your views, perhaps on the macro environment that the world is in at the moment. I certainly don't disagree, but I think you're probably looking at, perhaps, if you're dollar cost averaging, obviously different game, but perhaps defining risk against recent lows is a very, very good way to do it. Very, very similar with silver. If you've been following the channel for the last 12 months especially, silver has been an absolute monster. Ran into Fibonacci levels, target met, sell off. Now, something also to be aware of, especially with this ETF, you should maybe do some due diligence on Jane Street. I believe that they have brought on board a very healthy and significant position in the silver ETF. So what does that mean in the near term? I think you can probably expect a lot of shenanigans. Generally, if Jane Street are buying into one of your positions, it's just a recipe for chop and disaster. But that's something perhaps to consider. Now, I am going to get into the technical analysis of a lot of stocks that you can potentially buy over the next few weeks. Again, I will just add the caveat that if the market does decide to sell off badly on whatever news event we are given, a lot of these charts may not become actionable, but I think a lot of them make a lot of sense in the current environment, certainly for adding to your watch lists. So there's a lot of kind of investing opportunities. There's some kind of swing trading opportunities as well if you're more tactical in your approach. But let's just start off with a few big hitters. I know technology is an area that most folks are looking at because of the recent pullbacks that we've had to deal with. I think Netflix potentially could make a lot of sense. I think there's a case here that it has already bottomed. I see the news that they have again raised prices, tends to be a bullish catalyst. But again, I think if there is a further breakout above these levels, around 105, I think that might make a lot of sense. Another one that's holding up very, very well is Dell Technologies. As you can see from the chart, not all tech stocks are going down. There are plenty of stocks that are doing absolutely fine at the moment. For those of you that are wondering what this blue line is, this is a trailing stop loss tool set to very, very specific parameters. So I think Dell might be worth certainly adding to your watch lists for next month. Now, Microsoft, again, another massive pullback. Again, I've been covering Microsoft on the channel for a while now, especially on social media as well. I think any stock that's done any kind of deals with OpenAI has kind of just fallen off a cliff. But again, very, very similar to the triple Qs. When we got back down here at the April lows, it was a level where buyers stepped in. Now, I am expecting buyers to probably step in again down here, but whether or not that rebound is weak or it turns into something more meaningful, we'll just need to wait and see. Again, I think it's very, very clear if we break below these levels of the 2021 highs, the April lows, then something bigger is probably afoot here. We're probably dealing with something that's bigger than a 10% S&P correction. Another chart that I like a lot at the moment is AMD. Company I'm probably married to it at this point. It's a stock that I've done incredibly well on over the last couple of years. It has been range bound. It's been more of a kind of a swing style kind of trade over the last 6 months or so. We have pulled in to its 200-day moving average. We've got a trailing stop loss parameters set as well. So provided we're kind of above this level around, as long as we're above 185, I think you're fair game to the long side. Again, if the market decides to sell off, then certainly don't go anywhere near it. If it breaks below these recent lows, again, you're probably dealing with something a bit more significant. Now, another stock that I think many folks haven't heard of, Iridium Communications. I would encourage you to do some due diligence. You might see in the top right of my chart, I do use fundamentals with my analysis and my stock selections as well. And this has been an absolute massive gainer for many of our clients over the last couple of months. It's pulled in. I think the upside targets there up around 32, 33 still make a lot of sense. It's held up incredibly well. It's been incredibly resilient. And what you tend to find when we do get the inevitable tradable market low is the stocks that have held up the best oftentimes are the leaders at the start of the next cycle. So from that perspective, maybe Iridium Communications might make some sense. We've also got Apple, which has pulled into its 200-day simple moving average. Again, it's a very, very choppy looking chart, but if we're not looking at stocks like Apple when they've pulled into their 200-day moving average and they're on sale, then what are we even doing? I think you just have to look at it as a massive opportunity. But again, if we do break below these key levels, then that's a problem. A lot of the selections that I've made in terms of the mega cap tech selections today have been selected because there are very, very easy outs with very, very minimal damage if you are going to test the waters a little bit. It's the same message I guess with stocks like Amazon. Again, you just have to look at it as opportunity. Over the course of the month, it has progressively got weaker and weaker. Again, one of those stocks that I believe, and certainly don't quote me on this, I believe they have some kind of exposure with OpenAI and Sam Altman as well, which has just been an absolute recipe for disaster. But if there is a rebound on this over the last couple of trading days of the month, and next week, the first week of the month, then perhaps that might offer some kind of a tactical rebound to the upside. I think worst case scenario is you get it at a bigger discount. But again, I think Amazon, I think you absolutely need to look at that chart as a potential buy the dip candidate. Same with another mega cap, big tech hitter. It's up to 4 trillion market cap as well. Again, I'm using the AVWAP levels there from the April 2025 lows. It has been kind of choppy and range bound over the last 4 months. I think a lot of folks know that and accept that. But again, I think as long as we're above the AVWAP levels there, and again, I think it's fair game. Tesla, again, it's at the low end of a risk range there. It's something with Tesla, and just maybe to point this out, there's a lot of question marks and a lot of I guess analysts are looking at the lofty valuation, etc. How much longer can Tesla support it? Cathy Wood and her outrageous Tesla price targets will only hold it up for so long, I guess. But if you are in the camp that Tesla goes higher, I think you absolutely need to be looking at this level around 365. Needs to hold up. I think below that, then again, it's getting a bigger problem there for Tesla. Palantir, I think it's already potentially bottomed. Obviously, there's a lot of controversy, I guess, with the company and what it is they do, etc. But again, you've been following the channel for a while, you'll know that this was an absolute monster gainer. I covered this one on the channel for a good 18 months throughout this whole uptrend. And I think there's a potential tactical trade there back to all-time highs if it can get above that kind of 160 level. I think it has been consolidating over the last few weeks. But I think it does need to confirm a breakout above 160. I think above 160, I think it probably goes back to all-time highs. Speaking of stocks that are pushing against all-time highs, we've got Cisco. Again, we're going back to the dot-com crash here. So this has been a a massive 25-year base in the making. It hasn't quite confirmed any kind of breakout at the moment, but again, it's worth adding to the watch list. Going back to what I was saying a few minutes ago, the stocks that have held up the best are oftentimes the ones that lead at the start of the next cycle. So perhaps there's something there with Cisco. Now, if you picked up last month's analysis, you'll know that energy and commodities names were front and centre for a lot of the analysis. Now, I've been asked for an update on a couple of names, so I think my views here on XLE, and one of my clients actually reached out, and I'll just walk you through what I was thinking. Obviously, the breakout's done its thing, great, happy days. Anyone with energy exposure, we're all super happy, high fives. But something to bear in mind if you are looking at buying energy up here is just how extended it is. I think you don't really need me to tell you. I think the chart in itself, it's had a monster run up. It's hardly had any breaks. Now, could it go on a bit of a short squeeze and rip higher? Of course it could, but I don't think there's necessarily, if you are looking at buying XLE up here, I think the time to buy it was a few months ago. And that's exactly what I said to one of my clients today. So, take that information what you will. Again, it's probably the same message with, stocks like ExxonMobil. Again, another stock that I covered on the channel for the last few months. It's been ripping higher. The targets that we're working with are still up around 235, but there are opportunities, I believe, in areas of the market that are maybe not as extended. You look at something like Targa Resources. Again, it's a name I'm sure not everybody is familiar with, especially if you're growth tech only. But there's a lot of really great companies, a lot of really great stocks that are doing growth tech numbers at the moment. So Targa Resources, I firmly put in there. Venture Global, again, has been an absolute monster over the last few weeks. Again, I've been covering this one. I've posted the chart a couple of times on social media. It just keeps moving through the levels. We're still working with our upside target here around 1950, with a best case scenario up at 2550. But please note that our trailing stop loss is up around 1360 at the moment. So if there is the inevitable sell-off on the back of a parabolic move, then that's where the kind of downside protection really shines. Texas Pacific Land Corp, again, I'm sure it's a company not many of you have heard of. Again, I've been covering this one on the channel for a couple of months. Would highly encourage you to look at what they do. Been an absolute monster. I think if there's a further breakout there above 550, I think taking out previous all-time highs becomes possible. But please note, trailing stop loss now is up around 482. Big breakout there in CF Industries for those of you agricultural stocks. Again, make a lot of sense. They have done over the course of the last few weeks. Big breakout to new all-time highs. The targets that we're working with here are up around 175. Now, ARM is another one that I think makes a lot of sense to add to your watch lists. Again, for those of you that follow the markets really closely, I'm sure you already know what ARM have announced this week. I think there's a potential pullback opportunity in ARM, but again, it probably comes with the caveat that as long as the market doesn't sell off, that's a caveat with pretty much everything at the moment. But for us, it's pulled back to kind of the trailing stop levels. It was a high conviction recommendation at 130. I'll just say that. And it had a very lucky move this week. A lot of our clients have actually cashed in on this move, but I think potentially there that pullback is a buying opportunity. I'm personally looking at this again next week. So I just kind of wanted to throw this one into the YouTube analysis for you. Another one that's held up very well is Target, which I believe is up 6-7% so far this month versus the S&P, which is down 8%. So, you know, if you are looking, you know, maybe for some kind of consumer staples, there is a little bit of, looks like a bit of a flight to safety there at the moment. Whether that continues is another question entirely. But I think, you know, posted solid earnings. I think the earnings reaction initially was great. It's pulled in. Again, it's not a fluke that the market's rebounded at these levels. And there's been a bit of a rebound. I believe it was up around 2.5-3% on the close today. So I think target might make some sense for folks. I think TeraWulf is another one of those growth tech names that I think a lot of folks are looking at what it did last year off the lows. I think it has been basing over the last 6 months. It's been very, very frustrating, I think, for a lot of investors. But I think if it takes out that level at 1850, there is a massive 22% short interest on it. At the moment, we're obviously testing these recent highs and have done again this week. It hasn't quite confirmed any kind of breakout, but I absolutely think it's worth adding to your watch lists over the course of the next month. Occidental Petroleum, again, the Warren Buffett zone broke out of a big, 18-month base. Since then, it's broke out and it's just kind of going from strength to strength. So if you are looking at energy stocks, it's been a big, massive 4-year sideways nothing burger. If you follow me on social media, you'll know that I'm eating humble pie at the moment because I posted quite a negative comment about Occidental Petroleum a few weeks ago. I thought there were better options out there, but it's made me eat my words. So if you have been holding Oxy throughout this, hopefully you're being very, very well rewarded. But for us, it's been a tactical trade opportunity on this breakout. Back to all-time highs is the hope there. Another one that I think is going under the radar, again, we're going into the kind of the small cap space, big short interest there. Seadrill Limited, I think if it takes out these levels here around 46, 47, then again I think there's potential for a tactical trade opportunity. I never know how to pronounce this one, Oneok or One Oak. If somebody knows, drop it in the comments, please. Yeah, the big tradable bottom a few weeks ago. Since then, it's been working very, very well. Again, one of those stocks that's making new highs as the market's cratering. So I quite like these types of stocks at the moment. Our target on this one is up around 118. We've got Tower Semiconductors again. It's another stock that I've been covering on the channel probably for the last 6 months now. It continues to go from strength to strength. The market cap on it is still only 19 billion. So potentially, you know, it's one of those tech names that has been holding up and doing really, really strong things at the moment. So that might make some sense. Now, I got a lot of questions after my analysis last month on this stock in particular. A couple of folks have reached out on Twitter as well. My message is very, very simple with Sasol Limited. Again, it's probably a name that not many of you have heard of. I think there's obviously been very, very supportive fundamentals on the company. Our initial target is at 14. But if you look at historically on the chart, which is what a couple of you have pointed out, it has been much higher in the past, and I completely understand why you're asking the question. For me, like I said, it's just been a tactical opportunity on a base breakout on a strong stock that has the potential to move higher. Ultimately, I never know how far a stock will go. I'm just watching for historical resistance levels that have had merit in the past, because when a stock starts to go sideways like this, you know, over a period of 6 months, for me, I much prefer just kind of reallocating elsewhere. I know, you know, for those of you that are long-term investors, you'll be, you know, cringing at that. But that's the way that I approach the market. So I'm looking at this level at 14, but very, very mindful that if it does break out above 14, you just stick with it. You have some kind of systematic trailing stop process. So thanks for those of you that reached out with the questions. Maybe you've got some questions of your own if you're watching on YouTube, dump some questions in the comments. I'm quite happy to go back and forth with you in the comments. And also lots of comments on strategy now. Again, another one that I made a bottom call on throughout this whole down move, essentially just saying look at the 2021 highs as a potential tradable bottom. Now we got a 50% rally off the lows. I think a lot of folks are happy with it. It's still up 25% from its lows, but something to pay attention to. Whilst it hasn't been a great last couple of weeks for MicroStrategy, the relative performance so far in March is actually very, very strong. It's done very, very well relative to everything else. So I think strategy, I think you can still remain bullish on it, but if it dips below 100, then I think all bets are off, and we are probably dealing with something a little bit more sinister in crypto world. But feel free to stick around for a little second. If you enjoyed the analysis today, there is a link in the description for our website at honeystocks.com. If you'd like daily access to a professional tier 1 analyst with a top track record, I'd encourage you to check out all of our transparent, time-stamped work. It's all available on the website. I think if you are a trader, an investor, a money manager, or a financial advisor, my work is more than likely a really good fit for you. But we provide memberships to all of our premium work. That includes our complete market breakdown and our trade ideas every single weekend. All of our highest conviction investment ideas. I will show you what that looks like in just a little second. You also get access to our bite-sized midweek halftime report update, as well as a few extra trade ideas. Not just that, you also have access to a wonderful, intelligent community of professionals, investors and traders from all across the world. You have complete access to all of my chart books, which includes all of our ETFs, commodities and all of our trade ideas. And I think if you are someone who is new to technical analysis, you also have access to our complete technical analysis program, which will show you how to read the market, how to build a process that's unique to you so that you can stand on your own 2 feet. But just to show you what our time-stamped, the highest conviction ideas look like, I'm just going to go through a few of our recent ideas that have gone out to our clients and members. Hopefully you can see from the charts that they are incredibly clear, they're very easy to understand, very, very simple instructions on how to approach our best ideas. But I am incredibly unique in what I do. I do publish on our website the performance of all of our highest conviction investment ideas that have gone out to our clients and members since 2018. So I think if you are considering potentially accessing our work, please do make sure that the types of ideas that I generate are the types of ideas that you like to buy. It's always high quality stocks with solid fundamentals and solid risk to reward propositions as well. But I think generally my work is a good fit for anyone who has a mid-term approach. You're perhaps looking weeks to months out. If you are someone who keeps getting shaken out by market news, if you keep missing market bottoms, market tops, maybe you're just confused by all the different analyst opinions, and maybe you just want to be part of a community and access a top analyst, maybe my work will be a good fit for you. But like I said, please do check out our website, scrutinise it, make sure that everything is in place for you if you are interested in accessing our premium work. But if you've stuck here to the end, Have a wonderful month, and I hope to welcome you soon. Thanks very much.